All right. I just ate this move here. Nah, this yeah, this small move here. I just ate it. So I just realized something. Nah? Let me show you something. Let me show you something. Let me just go to the daily. Let me do some replay 2021. Okay. Okay. So now I want to show you something that is so easy and so simple that we need to understand. We're gonna be talking about bargain trend, ne? Trend, trend of the market. Where does the trend start? You understand? That is one important thing. So the only way to understand where the trend starts is if you are, let's say, for example, on the biggest time frame, which is here we have the monthly time frame. So this is where you understand what is happening. Ne? Let me add it. Okay. Hello, Nolo. Good, good, good. Okay, so now what we do ne? So now we are on the monthly ne? So now what you need to understand is how do we draw our trend line and how do we use our trend line to our advantage, ne? So now this is what we're gonna have. For example, I'm gonna make an example now. Let's say from here, this is the low, right? This is the low, and then this is the previous high, right? So now let's check out this whole move, right? So when we talk about trend, we are talking about a trend line, right? Don't mistake your trend line for your pattern line. The most important thing, ne? Don't mistake your trend line for your pattern line. So a trend, it's simple. You just follow the candles. You just draw your candles. So like that, that is a previous trend, ne? That's the previous trend. That is a downtrend, as we can all see. We can see we are going down here. So if you were trading this move to the downside here, what you're going to be trading is what? Ne? Is this, we have impulse, correction, ne? And then impulse, correction, yeah, and then impulse, correction, ne? So what we're doing here, from here, below this trend line, we can see we are trading this impulse correction, impulse correction. Let me do this. Okay, muted. All right. Okay, guys, we're on. So now, from here, from this point onwards, going down, we are on a clear downtrend. We can see we are trading below this trend line, and this is a downtrend. So what is happening here inside this downtrend? This is what we trade: impulse correction, impulse correction, impulse correction, impulse correction. Ne? And then now, decay. Where is that? I will still spell this thing doesn't show me. Okay, sharp. So now what we have now, we have the first impulse, right? We have the first impulse. So now when we have a first impulse like this, what happens? It broke what? Our trend line, ne? And then now when it breaks our trend line, now this means that what? There is a potential change of what? Change of trend, right? There's a potential change of trend. And remember, guys, the market, it's fractal. So whatever I'm doing here on the monthly, it can be done on the daily, it can be done on the weekly. So now I'm just avoiding a lot of noise, right? So now, as we can see, you'll see when we go to the lower time frames. So now here we have the first impulse, And then now, as this is our first impulse, we know that overall we broke what? We broke the big descending going down. We broke the big, what you call, trend line, right? So this trend line, this is the monthly trend line. And then on the weekly, this trend line will start from here, of course, from here to here, going down on the weekly, something like this on the weekly. So it will be inside, okay? So that is on the weekly. Then now what we need to understand, after this impulse, we know that now we must get a correction and an impulse, okay? We must get a correction and an impulse. And then now, knowing that we get a correction and an impulse, what next? Where do we put our correction? Because remember, guys, this is on the monthly time frame. And if you look at this move here, this move started from 2009 up until 2011, and it was going down. So we were on a downtrend here, right? We were on a downtrend here. Okay? So now, what we need to understand again is that if ever, right? I don't want to put this one here now. Not now. Okay. Not now. So now, what we have here now, we know that we have this push, and then now, when the market is coming down here, we have a correction, right? We have this correction here on the lows. So this was the downtrend here. Ne? This was the downtrend. I want to show you something. This was the downtrend. So on this downtrend, inside this downtrend, when we go to the lower time frames, inside this downtrend, this is where the market, this is where there is a reversal. Ne? This is where there is a reversal. So after this now, ne? After this, we have the first impulse again, which breaks what? Which breaks the trend line, right? It breaks the trend line. And then after that, when it breaks the trend line, what you call, DK, I wanted to show you something also. When it breaks the trend line, you need to understand something. When it comes to fibs and stuff like that, fibs, when it breaks the trend line, where do you put your fib? You understand? That is a question. Where do you put your fib? DK, can you help me there? I want to check something before I go on. Perfect. There it is. So it's like this. So we can see it broke our trend line, Angishu. And then now, after breaking our trend line, exactly 0.618. And then our first TP, you know, it's where 0.272. Ne? This is our TP. Yes. No, actually we have an extension. It's minus 0.272. Minus 0. It will always hit minus 0.272. If it goes from 0.618, ne? This is the take profit that you're gonna take. This is the one that I just took. I took this trade now on USD CAD. Like this, exactly like this. So this is the take. It will always, you know, when I say always, it's always, you know. So from here now, look, it comes to 61.8, right? So now what we can see is that now we understand that from here at 0.618, the market does what? It corrects. That is a simple thing. It corrects, right? So we have impulse, correction. And where's the correction? 0.618. And what was happening? I want you again to focus on something. Let me delete this fib. Now we are moving forward. Ne? We are moving forward. Let me remove this so I can show you that you will get it. There's no way that you won't get it. You'll get it. So now we are moving forward. DK? No, we are moving forward now. So here we are. We understand that this is the impulse. Let me put this in a different color so that we can see it. Okay. So this is the impulse. Ne? This is the impulse. And then this is the correction. And then after correction, we understand that we are waiting for the impulse. Ne? Now, DK, look at this. Also now, that's why all this knowledge is important, you understand? Now let me put this here. Where is that? I'm looking for, I haven't used that guy in a very, very long time. I don't even know where it's a rectangle. Okay. DK, you know what this is? Yeah? You know what this is? You know what this is, ne? You know what this is. You know where this price came back to. And now this 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 is another confluence. This is another confluence. Look at the confluences now. You have the break of the trend line. You have the correction. You have 1, 2, 3. You have the 1, 2, 3 pattern here. And then on top of that, you have the order block there. Then from there, we shoot to the upside, of course. And then from there now, I want you to check something. When we draw our trend line, when we are going up to the upside, let me replay this. Let me put this bar here. Let me put this bar here. Okay. Okay. So now, when you look at something, obviously, like I said, our take profit, né? Yes. Where's fib? Our TP is there, long position from here. Stop loss obviously below the order block. Take profit 0.272, just like that, which is a 5% somewhere there. Just this move, né? Without having to do anything. And then from here now, let's just play it. I wanted to say something here before I did that. Okay, from here, when this move went up, né, we know this move broke this previous trend. Né? And then from here now, where is our trend line? So our trend line here, né, from here, our trend line now, what we have? We have this point and this point, right? That is our trend line. So we don't know yet if this move is going to be an uptrend. As it is now, we just have a low and a high, right? So as it is now, like this, we just have a low and a high. Okay? Are we still together? Okay. Alright, sharp, sharp. So now what I was saying, okay? What I was saying, when we break here now, what we have, we only have a low, which is here, and a high, right? So we don't have an uptrend yet. So what constitutes an uptrend, right? What constitutes an uptrend, right? We know that in an uptrend we have higher highs, it's higher highs, right? And higher lows. That is an uptrend, not these things of lower, lowest lows, and I don't know. It's higher highs and and higher lows, okay, on an uptrend, okay. So now, when this market is like this, we only have a low and a high. And now, what will make this market to be an uptrend is if we get a higher high, which is higher than this one, right? A higher high. We need to get a higher high. And then from there, we need to get a retracement, which will give us a higher low. And then from there, we can say that, yes, then we can say that we are trending to the upside. So now, what we wait for, it's simple. So we can see we have this will be our TP. We took the trade, obviously. And then from there, let me just play it. Okay, TP, then we go TP, double top. Now, okay, let me pause right there. Ne? I want to show you something. Now, when we look at this market, ne, we have this as the impulse and the correction. Now when we go to the weekly time frame, let me go to the weekly time frame real quick. Okay, there we go. We're in the weekly now. So let me just mark my high with horizontal. Let me mark my high with a horizontal. Like this. Okay. Like this. Okay. So I have. Now I'm 1 hour to load shedding. My network will be starting to fumble. 1 hour to load shedding, guys. So yeah. Okay. So now what we have here now is that we have this impulse, this correction, and then now from here to here, guys, from here to here, what we can say is that what we are on an upward trend, because here now you can see something here. This is an uptrend. Look at this. I want to show you something. That finding a trend is so simple, and once you find the trend, you have everything. So now this is an uptrend here. This was an uptrend, and like I said, don't mistaken this trend line that I'm drawing for the pattern line or for the structure line. This is not structure, this is not pattern, this is a trend line. I'm just putting a trend line. So this was a trend line here. So what we see here on the trend line is that we have this impulse. Let me draw it, put it in another color here. So what we see on this, we have this impulse, we have this correction, we break the top. So that means we are trending to the upside now. So if we're trending to the upside, that means that now what we can do, if we're trending to the upside now, if we're trending to the upside, you connect the last two impulses to draw your trend line. The last two impulses, you only need the last two impulses to have a trend line. So yeah, I'm making a mess. Let me remove everything. I'm making a mess here. So what do I mean by that? By the last two impulses, is that now we are here. This market did this. It came down here. And then now, from here, it breaks. After it breaks, this confirms that we might be starting a new trend. So when this market breaks here, our trend line now, when this market breaks there, our trend line is going to be like this. Let me remove this. Our trend line will be like this when this market breaks here. And then now when it goes higher, this is the impulse number 1, this is impulse number 2. And then now when it goes higher, we'll evolve our trend line and then we'll put it here. So if this was this price here, if this price here had broken here, if this price was here, then this trend line we could put it here. But then now this price did not break here. So it means that our trend line is still where? Here and here. So remove this. So our trend line is like this. Is this part and this part. So now what happens now when you look at this? High, higher high, higher low, higher high, higher low, fails to create a new higher high. Right? Fails to create a new higher high, full retracement, and then out of the trend line. We do break the trend line, but remember, we don't trade trend lines. We're just using these to understand where the market is going. We don't use trend line. You can use whatever you use, but we don't use trend lines to trade. So this is to understand the direction of where the market is going. So from here now, what happens now? We have this correction and then impulse again. But it still did not break what? This. Right? So this means that now what we have here? We have a one move. We have one move here, which is what? Which is impulse and then correction. That is basically what this means. That is what it means. So we have that one move, which is impulse, correction, and then now this is our trend line here. This was our trend line. And then until this move breaks here, this was our trend line. And then from there, from here now, we have this. Okay. Are we still together? TK, Nolo, are you still there? The network is starting to be poor now. Okay. All right, sharp. So let me finish with the basics and then we'll go deep into how to get the perfect entry and everything. When you have included everything, the order block and everything. Okay, so now, as I was saying now, it means this will be our main trend line. You see? This will be our main trend line. And then this is one impulse. And this is what? This is now the correction. You see? So this is now the correction. So what we can see from here now is that now we have a move which has changed the trend or the possibility of changing the trend. So this is the main trend line and then this is the correction. And then from the correction, what do we expect? Of course, the impulse all the way to the 90. The impulse, like I said, remember, this is the first impulse. Let me put my Ntung there, my fib like that. So this is the first impulse. We know, number one rule, decay. Whenever you fib, whenever you fib, whenever you fib, you always fib the first impulse. Always. That's it. It's the first impulse, and then that's it. You don't fib the rest, just one impulse. That is the most important rule of fib. You fib the first impulse to the opposite direction, right? So now, for example, what I'm saying is that we have this as the big impulse, and now we have put our fib. You know how the fib works. From here, we have the correction all the way to obviously 0.618. You can see it moves. And here at the 0.618, what can we see again? We can see that we form a what? An inverse head and shoulder, right? Exactly at the 0.618. Ne? And then now, if we're entering, obviously, this was going to be our entry. Our TP, I said, were 0.273. Our stop loss was going to be like this. So on any other time frame, let me just play this. On any other time frame, it's still the same thing. It's still the very same thing. So let's just play this and wait for it to get to TP. King, TP hits, okay. Pause. So in any time frame, it's about the trend and where the market is going. And where the market is going. You see our 0.272. What did I say, DK? It always hits. It always hits. So when it hits 0.272 now, what do we focus on now? Ne? So let's say now it's today. Let me now do a chart, right? Let's say let's choose another pair, for example. Let's say Euro GBP. This one is Euro odd. Let's say New Zealand JPY, for example. Okay. Just replay. Don't want to go too far. Want to go where we can find a replace. Ne? So, okay. Here it will allow us. So, let's say it's today. Let's say today. This is the day. 2021. 12 February 2021. We just opened the chart together now. What are you going to do? What do you need to understand with the market? You understand? What is going to make you to enter? So there are two things that you can do. You can start on the daily or the 4-hour, right? To find your trend. Then now if we're here on this, if we look at this, if we look at this market, like this on the weekly, let's start on the weekly to understand what is happening on this market. This market here has been impulse, correction, impulse, and then after impulse, what do we expect? correction, right? Correction. And then after correction, we expect another what? Impulse. But then now, if you look at the trend, let's talk about the trend now. This was our trend, ne? This was our trend here and here. This was up, ne? Then now, here on this trend, we had a downtrend, right? We had a downtrend. So now, if you look at the way, let me put this trend line here. If you look at the way that this market broke this trend line here, how did it break? Correctively. You understand? It broke correct. There's no progression. It's not going anywhere. It broke correctively. So now, what does that mean? It means that this market has a potential of it being an impulse, correction, and continuation, right? So now, when we break from this trend line correctively, what are we forming? We are forming what? A structure. And now, what we do? We just evolve this trend line to be like this. This will be our main trend line now. And this will be our structure. Now we have an overall structure on the weekly. So now this is the top of the trend line. This is the target. You see? So that is the target on the weekly now. Already we have the target on the weekly. Now we do the same thing. We go to the daily. Okay, we go to the daily. So now on the daily, what we need to understand is that we had this impulse. This was our impulse. This is our correction. This is our impulse. This is our correction. And then now here, what is happening is that the market is just going all the way up like that. But what we need to understand now is that we broke the trend line, right? We broke the trend line. And now we had the first impulse. And after the first impulse, we just need to see that reaction to say that the market is going to give us what? That 0.618 correction to take the market to the what? To the upside. So we're going to get that A, B, C to the upside. Ne? So from here, this on the bigger time frame, we are still on an uptrend. So this is high, our trend line like that. So I can remove this. Let me remove this because we already know there. Let me remove this trend line. Let me delete this. Remember, this is just trend lines. Ne? This is just the trend lines. So what we see here is that now we have impulse, correction. So this was our last two impulses. This one and this one is the last two what? Impulses. Those are the ones that we connect. Remember, those are the ones that we connect to get our what? Our trend line. Ne? The last two impulses. So it's this one and this one. So I'm just connecting it here. The last two impulses. So if we're trading on any other given day, obviously, these are the moves. These were the moves. So now, another rule of trend line, it's always drawn on the right side of the market, not on the left. So that's why I'm always saying that don't confuse patterns with the trend line. So now we understand here we are going to the upside, right? We're going to the upside. Yeah, pattern is for structure. Like you see here, this is a pattern. This is a pattern. But here, this is just the trend line that is giving us direction to say that this market is on the upside, is going up. So now, where is Nolo? Nolo, are you following? Oh yeah. Okay, let's continue. I'm left with almost 20-30 minutes before you know. Okay, so now we have here, inside here, we have this market which broke. Now, this is our trend line. Ne? This is our trend line. So on this trend line, when we go to the smaller time frame, you'll see what we're going to find here. You'll see what we're going to find on the smaller time frame on this trend line. You'll see what we'll find on the smaller time frame here. So let me just quickly go to the 4-hour. So this is what we have on the 4-hour. So as we can see, this move is still on an uptrend, né? But corrective, of course, using our strategy that we know. This is corrective. Yeah? So we just connect the highs like that. So if this is the pattern, this will be a pattern. Yeah? Then the trend line, when we're coming up here, I want to show you something piece by piece. When we're coming up here, we had this impulse and we had this correction. We broke the top. We had this new impulse. We have this correction. We broke what? The top. So now what we can see now is that now we have this. Yeah? So this will be a correction here inside, obviously. And then here also, this will be a correction. Because this is what the market does. Impulse correction, impulse correction, impulse correction. Yeah? So I want to show you a trick. Another trick that I just saw now using this method also, which will become in handy. Yeah, no problem. Okay, so DK, Nolo, I want you to look at this. Ne? This is an uptrend. So let's say now we are trading this market. And then now we have this first impulse. And now we corrected to the correction. Ne? We corrected here. How were you going to enter this market? It's simple. This, remember those things of support and resistance that we used to use if you want to enter. Aha. So it's simple. This is an area on top of your correction, that is where the market comes back to. If we're still going up, remember we are trending up. So if we're trending up, the market will do what? The market will do this if we're trending up. So this is your position. This is your position. And also here, we have this, before this big position here, on the ane here, when we broke here, we had this trend line. This market was trending like this, right? I want to show you something. When we broke here, when we broke this correction, this was the trend line, this trend line here, right? You can see this is a high, this is a low, this is a high, and then now it comes here, and then it breaks the trend line, it retested, it went down. But when it went down, where did it go down to? It went down to the main what? To the main trend line, which is on top of the correction, which is now where? Where's DK? I want to show this one. You see? Where's DK? This one is a bit big, but we can make it smooth on the smaller time frame, you know. This one here, we can make it small on the smaller time frame. So you see when the market moves, where it's coming back to. So we have this, come back to it, test it, we still continue to the upside. Now we did again, we break structure, we're still expecting. Now when we look at this now, when we look at this, we have the market which is up, down, then here up, then down, then here we failed to create a new up. Ne? So now it means that now this was our trend line like this. Ne? This was our trend line like this. Ne? So this was our trend line like this. So we can evolve this. It is like this. This is our trend line like this. So what we can see, we have the impulse, the correction, the impulse, the correction, the impulse. We broke the trend line, we retraced it. So now, what must happen? We know that now we have this head and shoulder. We broke our trend line. What we want to see now, there are two things that can happen. The market can come here to the main trend line and continue to the upside, right? Or it can now break. If it breaks, if this market, until this market, remember, until this market breaks here, if this market breaks here, going down here, right, we can see that the overall trend is going to change to the downside. The overall trend. Ne? So now, we must understand there is a trend within a trend within a trend. That's why you'll find that the 4 hour can be going like this, going up. The 1 hour can be going down. The daily can be doing something like this, you know. So it is about, are you on the right side of the market? So now what we have here, DK, now what we have here now, we can see, looking down here, we have a head and shoulder kind of formation, but we did not really have a break, structure break here. We did not really have a structure break here. So we wait for the market and see if this move will come back here and give us, because if this move comes back here, this is what we'll be expecting. We'll be expecting a move to come back corrective like this. So now let's just give it a play. Let me play here. Aha. So you see, we did not break here. So now, we did not break here. We did not have an entry confirmation. Remember, we did not have an entry confirmation, né? Because we never had a structure break here. Right here. There's no structure break here. So like I was saying, there's no structure break. And remember where we said, this is where the price just broke. So now, we're still trending up. So this is the market. Remember, this is the last impulse, okay? This is the last impulse. This was the correction. So if you look at the last three, what was happening? Impulse, correction, impulse, correction. Impulse is still an impulse. And then now, for it to be a downtrend, it must do this. It must do what? This. Break this low. And then maybe come back somewhere around here. And then we can go down. Right? But for it now, it did not break this low. We are still going to the upside. So this simply means that now this trend line will simply evolve to this. And now what you see here now, you start to see this. You start to see this. You start to see these corrections here. Let me put this nicely. You start to see those corrections. So your entry, remember, your entry, so if this was like this is ugly. Let me go to the 1 hour. Let me show you something here in the 1 hour. So, let me remove everything. The previous trend is here, right? This is the break of structure. So, we have this as the previous trend, like this. This is our previous trend, which of course gave us this pattern down there, this beautiful, beautiful pattern. So if I can go down to show me the pattern that I'm looking for, right? So this is the pattern that I'm talking about, that it gave us coming down here to this low, right? And from there, the same thing applies. The same thing applies. This is the first impulse, which broke what? The trend line. Let's fib it. It's fibbed like that. So look at this. Impulse, correction, this is our first correction. So now, as this was ugly, we can have 1, 2, 3. You can enter on the third touch here, right? Or you can enter on this pullback again, on this pullback here. So now, obviously, this one also long position from here on the third touch. Take profit, remember, 0.272. So like that, even this one, the same thing. So when you move forward, knowing that now we are on an uptrend, is the same thing. If we have a correction like this is now our correction. This is now our correction. So if you fib this correction, the break of this correction, you understand? So you always fib the first impulse out of a correction. You understand? You always fib the first impulse out of a correction. Then if you fib this, it comes back straight to sniper. And then now we have an impulse. This is a correction, obviously. This is a correction. So if I go to the lower degree here, if I wanted to scalp or something, it should be here. Mara, let me not go any more further. It's too much now. It's too much. But you know, if I wanted to go any further there, we could still get that that first impulse. There we go. There's the first impulse. And then from there, there is the correction. It did not really, this was 50%, somewhere there. And then obviously, yeah, it came to 50%. This is wave 2. It's because it's wave 2. So we know this is what we have. What we need to understand, the most important thing with this is that for every move up, a correction is needed. And after the correction, another move up is needed. That is a must. You understand? It's a must, right? So for every move down, a correction is needed. And another move down is going to come. That is a must. So there is no way. This is how the market moves. This is how the market moves always. Impulse, correction, impulse. Ne? But what you have to understand is that when you draw your trend lines, the most important thing, because if you understand the trend, if you understand the trend of the market, okay, okay. Okay. So now, what we have here, we have an uptrend. Ne? So our trend line here will be like this. Ne? Will be trending like this. So whenever we enter, our entries will be here. So you don't have to draw all these confluences, but having an understanding is one good thing. You need to understand it. If you understand it, then you'll see what I'm talking about. Let me just put it there. Where's that thing? So, what is this? This is an entry. Okay, this one also here. So going up, this will be our entries. There's an entry here. Before this pull back to the main trend line, we're trending upwards like this. Ne? So we need to understand that the market moves, like I said, how the market moves in all time frames. Ne? In all time frames, the market is the same. It moves like the same. You understand? So whatever you see here, we will have this on the 1 hour. This will be an uptrend, and this will be a downtrend. But then overall, we are what? We are on an uptrend. But then on this specific day, if we're going to be entering here, we'll be on a what? On a downtrend. So it's either we're looking for sell positions or we're waiting for the market to get to our call for us to go to the upside. And then when the market from here goes to the upside, this will be our uptrend. So you don't need, for you to identify the trend, You don't need 5 or 6 candles, or you don't need 100 candles. I mean, you just need to connect 2 previous impulses. Then you'll understand your trend. Ne? So if I show you something, let me quickly go to US 30, which is now. This is playing out now. Ne? So I want to show you something here. So this is US 30 on the daily. Ne? This is US 30 on the daily. So what we see here is that now, this was our previous low. We just broke it. Ne? And then now, from here to here, we're trending to the downside. No arguments. We had a downtrend here. So if I go to the 4-hour like this, I want to show you something. So from here to here, let me show you. Yeah, there we go. This is the trend. This was the trend of this US 30. Yes, good. So this was the trend from here. We're trending down, right? We are on a downtrend. And now, what happens? What you need to understand when the trend changes. When does the trend change, right? When does the trend change? When the trend change, if we are going to be buying, if it's going to change to a buy, what we're going to have? What we're going to have is, let me show you something. What we're going to have, if it's going to change to a buy, what we'll have a market going sharp up, sharp down, sharp down, sharp up, correction, and then continuation. That is what happens if we're going to the upside. So we'll go up, correct, and then continue. So from now, what we have the market which broke our trend line. This is our trend line, mind you. And then now, obviously, this market came all the way to here. So here, this is usually, what is this thing now? So this is where we fib, usually. This is where we fib. This is where we fib. So this one, it went all the way down, 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 down. Pull back strong. Okay, it's fine. So from here, at this point of time, here, at this point of time, from here, we did not have a trend. We were ranging. We didn't know what could happen. We did not have a trend. We were ranging. So what can happen now? We know we broke up. We broke out of this trend. We broke out of this trend. Now we are starting a new upward trend. So this upward trend is going to be like this. We have to connect the previous impulses. Previous 2 impulses. So this is what we can see on these previous 2 impulses. We can see we have a high, a higher high, and a higher low. Higher high, higher low. It's here. Higher high, higher low. Then now, when you enter, what are you going to do? You're going to wait. Because now, remember, we know that now we have changed the trend. We'll be going to the upside. So now when we enter, now what you can see here is that now it's simple, man. Here's that thing. You can put this. You can do this. It's either we do this. Where is that thing? I mean, I'm not used to these things, man. I use them control. But I just want to simplify these things. Where's that tool, guys? Okay, see. So what you can see here, this will be our impulse, this will be our correction. So if we go to the smaller time frame, decay. If we go to the smaller time frame, decay, what do you see there? And then from here, I want you to see this also. I want you to see this. 1, 2, 3. So what is happening now? We are buying. So it's buying. So this will be the trade. So it means that now the same thing. This will be the trade that we'll be waiting for to take at the top here. So obviously our take profits will be here, here, and here at the top. So this will be our take profit, this will be our take profit, and then this will be our take profit right there. So this is how this one I see it. You see, like now when you go to smaller time frame, I want to show you how to put tight stop loss. So when you go to smaller time frame now, I want you to look at this. This is the 5 minutes, ne? So on this 5 minutes, you can still refine. You can still refine your OB just somewhere here. This is this gap. It fills this gap here, and this gap. So you can still refine your OB. So let's not focus on that. But then, okay, sharp. Now this is the OB, ne? So on this 5 minutes, we can still go to the 1 minute. Can still go to the 1 minute. So on this 1 minute, I want you to look at something, ne? This, when this move here was coming down here, we had a correction, a 1, 2, 3 correction, ne? We had a 1, 2, 3 correction to our order block. This is the 1 minute, remember? We had a 1, 2, 3 correction to our order block, and then the first impulse that breaks, the structure comes back to what? 0.618. You see? Sniper, another sniper. And this is what? This is correction. This is correction. So we have impulse, correction, impulse now to 0.618, correction, and then now we are trending to the upside. So this was our trend line like this, and then now we have this trend line changing like this. So now if we go now back to the 15, this is the 1 minute, remember. So now when we go back to the 15, you see, we can be able to get the change of trend right here on this one, because you managed to catch that trade right here on this one here, and then now boom, we are going to the upside. We are going to the upside. Boom, there we go. This is what we're expecting. We're going to the upside. Over. So yeah, guys, I don't know, we can still work on this one, but I'm going to send you the video. I know after sending this video and you look at it again, you'll see how this thing operates, and you'll see how everything comes into one thing: the trend line, the structure, the market structure, the order block, and SMC. How everything is basically just one big tree of trading. You understand? It's just one big tree of trading. You understand? It's just one tree of trading. So that's why for me, I always say that it does not matter. It's about how you understand the market and what you need to focus on. But if you combine all these things, it takes brains to be able to combine all these things and use it as one thing. It's not simple. But if you can be able to combine these things, all these things, and understand the trend, the structure, the order block, I'm telling you, every day sniper, every day until the rest of your life. I'm telling you. That is a promise. That is a promise, man. It's all about being patient and waiting for it to come to you. You understand? So no, we'll still have some of these meetings on this one, on how we work on this one, and then yeah, we can take it from there. Because now I'm going to have load shedding at 7, so as I wait for my load shedding, yeah, let me be busy with some other stuff. I will send you the recording, obviously, when it's done. I'm gonna compress it because after this, yeah, DK. Oh, DK, wait, before you go, DK. But Mara, no, this one is for DK. When it's for DK, I mean like for advanced. You understand? This one is for advanced, but you can try it. So I wanted to show you this one. You remember this one I told you about it today? This one. This one. I showed you this one today. This is how it is. Ne? You may have to make sure that here on the settings, you change this 0.33 to 0.272, which is our fib. It's 0.272, ne? Yeah. 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 And then okay. And then from there, that is it. It shows you everything. We go to 1 hour. It shows you everything. Here's your order block here. This is the market structure break, MSB. You can see this is going up, it breaks structure, market structure break, up, market structure, sell here, buy. Look at this, look at all these signals, look at this, look at this, look at this. Break, sell, break, sell, break, sell, break, sell, break. You see this one? Now we change the trend to buy. Then now we are at this big order block here. You see what is, it's powerful also this one. It's very powerful. It's very powerful. It's very powerful this one. I saw it. You see, like look at US state. You see the uptrend that I was talking about. It's a market break here. This is our order block somewhere here. And we have this market break here. This is just a retracement. It's gonna continue. This one is powerful. If you understand the order blocks, you know. So that's why Nola don't wanted to be confused now. Because that one for order blocks is too much. Still very far for her. Don't wanna get confused. Still very far for her. So for now, practice on the trend lines, practice on the structure. The trend lines and the structure. Yeah. It's simple. You know it. So no, I'll send the video once it's done, and then yeah, we'll take it from there, guys. Shut